Rocked by the global financial crisis which hit last November, Temasek Holdings' net portfolio value suffered badly in the latest financial year ended March 31st. Its net portfolio dived from its peak of $185 billion in March last year to $130 billion. But Temasek has since managed to bounce back with a $42 billion recovery to $172 billion in July, thanks to a rebound in the world stock markets. The figures were announced this afternoon at the release of its annual report.
We have been building up our liquidity methodically over the last 2 years as we were mindful of a possible downturn. This gave us a good net cash position and a lot of flexibility during a time when credit was very tight around the world. We had the opportunity to participate in the rights issue of several of our portfolio companies, including Stanchart and DBS. We are happy with these investment calls. So today, looking forward, I think there will be some medium-term risks, but I think we have the full flexibility to do what we need to do. And we have the full flexibility today to think of what we should do for the long term rather than be constrained.
Temasek's net profit also took a hit for the latest financial year. At $6 billion, it's one-third the record $18 billion for the preceding financial year. The drop in group profit was owed to lower contributions from both its portfolio companies and Temasek's investment activities. The negative wealth added, what Temasek calls its return in excess of its risk-adjusted cost of capital for March last year, also means additional clawbacks this year for the remaining deferred staff bonuses. Temasek had a negative wealth added of $6 billion for the previous financial year and a negative wealth added of $68 billion for the latest financial year. But it seems lessons can be learnt from their poor performance in the last financial year.
One of the assumptions, which turned out to be a wrong assumption that we have made, or we have sort of taken for granted, we were looking at the markets and we felt that there could be a downturn because there were different indicators and so on. But we were looking at the triggers in the wrong places. And part of the reason is because we made the assumption that the developed economies, particularly the large economies, are well managed and that the regulatory risks are low. And hence we did not pay that much attention. So if you look at going forward, I would say today we pay a lot of attention to what is being said and done in the US, even when we don't have large exposures to the US, because that can affect the rest of us. So that would be, I suppose, one major change that has happened.
Going forward, Ms. Ho said Temasek believes the worst of the global meltdown risks are behind them, and they remain optimistic on Asia and other growth regions such as Latin America for the longer term.